So you're thinking of moving to Bend, Oregon? In this episode, we are going to invite in a special guest, a local lender from here in Bend, Oregon that knows the area very well. And we're going to talk about 2-1 buy down programs. With interest rates being so high, we want to give you an alternative that can help alleviate that pain for a couple years. So if you're ready for it, we're going to invite Sarah in and we're going to get after it right now. If this is your first time on the channel and you'd like to know everything there is to know about living, eating, sleeping, playing, the good and the bad of Bend, Oregon and the surrounding areas, subscribe below and tap the bell for notifications so you can be the first to know about current market conditions here in Bend, Oregon. My name is Zach Nutter, licensed broker with eXp Realty in the state of Oregon. My business partner Ryan and I, we get calls and texts every day from people just like you looking to make the move here to Bend, Oregon and all of Central Oregon, and we absolutely love it. So whether you're looking to move in 9 days or 90 days, give us a call, shoot us a text, send us an email, or schedule a Zoom meeting. All of our contact information is in the description below. We'd love to help you make a smooth move here to Central Oregon. With that being said, let's invite Sarah in and let's talk about the 2-1 buy down program. Okay, so Sarah is here with us now, and this is Sarah Saraceno with Guild Mortgage. She's licensed here in Oregon. How many other places are you licensed, Sarah?
I'm licensed in Washington, California, Arizona, and of course, Oregon.
Okay, fantastic. So that's awesome. So Sarah's available outside of the area as well, but she is an expert here in Bend. I know that. I've worked with her on many transactions. She's absolutely fantastic and easy to work with. So Sarah, today we wanted to talk about the 2-1 buy down program. As we know, interest rates have gone up substantially from where they were, say 2020, 2021, beginning of 2022. But that's gone away with inflation. They're trying to curb inflation and everything else. And that is what the tool they have to curb inflation, right, is to raise the interest rates. So tell us a little bit about the program. Tell us a little bit about yourself and how you think this helps buyers in the market with rates the way they are right now.
All right. Well, thank you, Zach. This is the latest trend for home buyers right now. It's really popular because they've been shopping typically for at least a year. The market's been crazy the past year. Even during the COVID frenzy when rates were insanely low, people were shopping for a long time because there was multiple offers and people had to usually put in offers on many houses before they'd get one accepted.
Absolutely.
So this past year, rates have just skyrocketed. The feds are trying to slow down consumer spending and increasing things like interest rates. So it's working to some degree. However, there's always still a demand for homes, and that's why my clients today are using 2-1 buy downs, because the houses that they were looking at a year ago and the rates they had, the payment was one thing. And then now the payment has skyrocketed and they think, oh my gosh, like, I don't think I can buy anymore. Well, the buy down option is awesome because it can either be seller paid buy down, it could be the buyer paid buy down, or it could be a lender paid buy down. Now they've opened it up to all three, which makes it really flexible for people to get in with the first couple of years payments lower than what they will be going forward. And there's different buy down options. There's a 2-1 buy down where year one, the payment is 2% lower than what the locked in 30-year fixed rate is. And then the second year would be 1% lower. And the third year would be the fixed rate on to the end of the 30-year span.
Okay.
A 3-2-1, similar, 3% lower than the locked in rate the first year, 2% the second year, and 1% the third year. Fourth year becomes the final rate. And the way consumers are looking at this is they're thinking, gosh, our rate's going to come down in the next 3 to 4 years. Yeah, they are. So therefore, they know they're going to not be stuck in on that 30-year fixed rate. It's going to basically give them the flexibility of having that payment that they were looking at a year ago and knowing with peace of mind, when rates come down, they're just going to refinance into their lower interest rate, and it's going to be similar to what their first year or two was on the buy down rate. So it's giving people a lot of peace of mind knowing like, oh my gosh, my payment didn't just double or triple from what it was last year. And makes the first couple of years easy. And we all know that rates are going to come back down in the next 2 to 3, maybe even 4 years at the most. But it's being predicted that they're going to start coming down by the end of the year. And Guild Mortgage is so confident in this that they are offering free refinance fees for anybody who buys a home right now, and this will be between now and 2026, the end of that year, that they can have that refinance option because they know rates are going to be lower then. At some point between then and now, they'll come down.
So if you have a client that closes right now, your office with Guild, or is that all Guild offices?
All Guild, and we're nationwide.
Okay, that's fantastic. So if you bought right now, use the 2-1 or 3-2-1 buy down, and you refinance before, what'd you say, 2026?
Yep.
Wow, it'll be a no charge refinance?
Correct. No lender fees for the refi.
That's pretty phenomenal. That's great, because I know there were some things that have come up if your interest or if your credit score is lower, that the refi or the loan fees are getting higher and higher. Is that correct?
Yes. Oh gosh, this is a whole nother can of worms, but there is what's called loan level price adjustments, and Fannie Mae and Freddie Mac have come out with a new structure on how they're going to do certain price hits and also benefits depending on where you're at. It's actually kind of silly. So if you've got a great credit score, you're going to have higher price hits. If you've got a really low score, it's still going to have the same bad price hits. But if you're in the middle, if you're between, say, 640 and 720, that's when you start to see the benefits of the price adjustments. So they're kind of penalizing the really good credit borrowers, which is frustrating, but is what it is.
That's interesting. Sorry, I know it got a little off topic there, but going back to the 2-1 buy down or the 3-2-1 buy down. So explain to us exactly how that works. So say you have, I've got a client, they make an offer, gets accepted. The rates right now are what, 6.5%?
Yeah.
So tell me exactly how it works. My understanding is first year their rate would be 4.5%, second year would be 5.5%, and then the third year on it would be 6.5%. Now that 6.5% is locked in, correct?
Correct.
Okay. So there's no adjustable rate after those first 2 years. It's not like they have to worry about if rates go up like they did many, many years ago into the double digits, that they're not going to have the original rate, that 6.5%.
Right. Yep.
Okay.
So that's no adjustable rate mortgages.
Okay. Because those are scary, right? We don't know. And I know we talked about it earlier that we do anticipate rates going down, but what people don't realize or haven't thought about is we had those great rates for so many years, but those were the abnormal, right? Those were the exception at 3.5%. Those are historic low rates, when a 5.5%, 6% rate over a long period of time is a pretty good rate. Correct me if I'm wrong.
Oh, it's a great rate. Absolutely.
So I think we just got a little spoiled with the lower rates. And so now we kind of have to recalibrate our brains a little bit and adjust. So, okay, so we've determined what the 2-1 buy down program is, how it can be beneficial if they do refinance eventually. Let's talk a little bit about how much the 2-1 buy down costs, who pays for it traditionally, any other caveats that go with it.
Okay. Well, I won't get into exact specific numbers, but I do have a graph that'll kind of really spell out the benefit of why you would do this, even versus putting in an offer that would be maybe under list price.
Okay.
And why it's actually more beneficial to take the list price, the higher purchase price, and utilize a seller credit to do the buy down. We're seeing sellers pay for it right now.
Okay.
But like I said, lenders can pay for it and buyers can pay for it. It just depends on who's got the flexibility, right? And who's got the willingness to do it. But right now, sellers are doing what they can to get their homes moving quicker. They're sitting on the market longer. And this is a great way for them to do that, is by offering the seller credit to buy down the rate. And so I'll show you with my screen. Let me know if you can see it. So this would show you a list price of $650,000. You could offer lower than the list price of $630,000. Or you can do the whole $650,000 with the $6,000 seller credit.
Okay.
So shows the rate pretty much the same between option 1 and 2.
Okay.
And then on the buy down, the rate comes down to 5.433%.
Okay.
And that's the APR 5.125 rate. The loan amount stays the same from option 1 to the option 3. And so you would think, looking at this, you would think 598,000 seems like the better deal for a buyer. But when you start going through the numbers, your payment is $4,529 per month.
Okay.
The payment on the second option, where it's $20,000 less than the list price, that's a huge reduction in price. The payment's $4,394. That's a great payment. But when you look at the buy down option, because of the lower interest rate, the payment now becomes $4,385.
Okay.
It's even better, not by a lot, nothing to get excited over. But when you look at the monthly savings, 144 per month versus 135 per month is a pretty big deal. And then your funds due at closing is roughly about the same.
Okay.
And so therefore, like over time, it's going to benefit the buyer to have the buy down rate versus taking a lower sales price.
Okay.
And
now, is this a traditional buy down or is this the 2-1 buy down?
So this is just showing a buy down. It's showing, and I can pull up another graph, but this is just showing why you would do the buy down. Because you would think, like, if the list price is $650,000 and you're getting a $6,000 seller credit, the seller is also getting a really great deal. But as the buyer, they're coming out ahead in the long run also. I mean, the bottom savings bracket that says over 60 months, your savings becomes nearly doubled from if you were to take the lower sales price to do the buy down. And so this has got to be more of a permanent buy down. But I wonder if I can. Here is kind of how the buy down would work. And I have not said as well that this works on conventional FHA, VA. It'll work on USDA as well. Pretty much any loan on the market. You wouldn't do it on an adjustable rate mortgage. You wouldn't do it on a jumbo loan. Those are not an option for jumbos, but most loans are able to do the temporary buy down. And so if you're locked in at 6%, and this is a 2-1 buy down, the first year is 4%, second year 5%, third year 6%, and on to the 30-year period. And that's pretty much how they work. I think, why is there a difference between a 2-1 and a 3-2-1? Well, cost. The 3-2-1 is going to cost more, and the pricing on the cost it's similar to any other rate sheet because rates change every minute of every day.
Of course. And
the rate sheets will populate the cost for the buy down. You just basically plug it into the loan, and you'll see like the difference. If you can get enough of the seller credit to cover the buy down, the 3-2-1 buy down, you're going to go with that as an option. But if you can't, you're going to go with the 2-1 option. Or if it's buyer paid, you're going to do with whatever you find is more flexible financially. I would just say to keep in mind that depending on your loan program, if it's FHA or VA, you'll only be able to get a 6% seller credit. And then on conventional, it's only 3%. So you've got a big difference there on what you're capped at to get. I mean, 6% is a huge amount.
It's a lot of money.
Credit, honestly.
Absolutely.
So at that point, there's no reason you shouldn't be able to do the 3-2-1 buy down on, say, an FHA loan. Okay.
So the one thing that I always tell my clients too is if you're going to use the 2-1 or the 3-2-1 buy down program, no matter what, look at the final number at the end. This is something to help you in the short term, but look at that number at the end and make sure that you can make that payment for the next 27 years, right? Because people say, okay, yeah, for the first year's at 4 or 4.5, second year's at 5, 5.5. Those are great, but those aren't your permanent rates. And say rates don't ever come back down, which a lot of people believe that they will, but you always want to make sure that you can make your payment long term. So look at that last number and make sure that you can make that payment long term.
Glad you bring that up. So we have to use the high rate for qualifying purposes. So we can't say, oh, at this low 4% rate, that's where they're maxing their debt ratios at. Well, then, gosh, well, year 2 or 3, you better hope that those clients are getting a raise or they're not going to be able to afford their payment. So it's nice that we're qualifying the borrowers at the high interest rate, but they get the benefit of the lower. But absolutely, I mean, you just don't know what could happen. You could have, say, a mortgage late payment come up, and therefore if it's on your credit in the last 12 months, you can't do a refinance. So if rates did drop, you're going to be shooting yourself in the foot saying, well, shoot, I couldn't do a refi. Once that mortgage late falls off, now rates are back to where they were when you locked in, and you're back to square one, stuck with your, the 30-year fixed locked in rate. So I'm glad that you bring that up.
Yeah. No, it's an amazing tool. It's just one of the many things that that Guild Mortgage is bringing to our clients, and we absolutely love it. Sarah, is there anything else that you wanted to talk about for the 3-2-1 or the 2-1 buy down program before we wrap this thing up?
I think so. We've covered it.
Awesome. So, well, thank you guys. Again, if you are thinking about making the move here to Bend, Oregon, or any of the surrounding areas, please subscribe to the channel, like the video, and tap the bell for notifications so you can be the first to know about current market conditions here in Bend, Oregon. All of our contact information is in the details and in the comments. So we look forward to seeing you on the next video. Thanks, guys. Thank you, Sarah. Have a wonderful day.
Thank you. All right, you too.